Well, let's move on to a corporate conversation now. We are putting the spotlight on Chalet Hotels. The company reported a pretty good set of numbers for the first quarter, boosted by the consolidation of their real estate business as well. Shwetank Singh, Executive Director at Chalet Hotels, is joining in for some perspective. And there are three key areas that we want to really focus on. Number one, sustainability of the average room rates, the growth over there, the outlook on occupancies as well. And then, of course, we'll chat with him about margin stability as they're looking at scaling up to beyond 5,000 rooms. And finally, the annuity income growth and the project execution over there. So let's take all of this up one by one with our guest. Thank you so much for joining in, sir. So let me actually start right there. I mean, first quarter has been very, very decent. And even if I don't look at the real estate business, if I just look at, the base business, it's a fairly steady growth. Now, as you're looking at Q2 and then we get into the full-blown festive season, what are your projections in terms of how ARRs are moving? They're northwards of 12,000 for you, I think, as of Q1. How much higher can ARRs go, and what are you projecting on occupancies?
Good morning. Good morning, Surbhi. Thank you for having me on the show. Let me first start by saying that, we are at a great time in hospitality. The quarter one, despite the geopolitical tensions, despite the Trump trade policies, whatever was happening in the Middle East, etc., we continue to put out a really good set of numbers. And a similar trend is continuing in quarter two as well. Typically in hospitality, the first half is weaker than the second half. So as the festive season comes on, exactly as you say, we expect the growth story not only to continue and sustain, but actually get better as we go along. The beauty of what is happening in the hospitality industry today is that the demand continues to outpace supply. So, there is no fundamental macro that is causing any issues to us as an industry. The corporate earnings continue to grow. So therefore, MICE and corporate travel is expected to continue to grow as well. Most people have now started to take more vacations instead of one or two large vacations during the year. So that particular trend has helped with the leisure business as well. So if you see overall, the macros of the industry stay very, very strong, and therefore we are confident.
Absolutely. That's why, Shwetank, some numbers will also help. Mm-hmm. Your ARR, like I said, it was above 12,000, I think 12,200 in Q1. Mm-hmm. What is the scope to take it higher? If you could give us some idea, and also occupancies. As we go into the full-blown festive and travel season, how high can occupancies go this year for you?
So, we have, as a portfolio, we have maintained really strong occupancies through the years, and we expect it to stay around that. Once a hotel stabilizes, the chances of the occupancy really taking off beyond a certain point becomes very difficult. So what we will continue to do is hold steady on the occupancy with occupancies going up in hotels that are not stable, particularly in the leisure portfolio. As far as the ADRs are concerned, as I said, the second half is expected to be very strong. So we do expect the growth story to continue. It will be difficult to give you exact numbers, but we expect a minimum of 10% plus like-for-like growth on the existing portfolio, with the inorganic growth helping us to go into the high teens for the rest of the year.
All right. Hi, Mr. Singh. Good morning. Good to see you, Ben. So you're saying the occupancy holds steady, mm-hmm. and ARRs, they perk up from year on because the second half of the year is likely to be far stronger, right? Are we getting that clear?
Yes, that's good.
All right. Now, margins have been a pleasant surprise. They've improved to close to around 40%. Yeah. That's encouraging. Now, as you scale towards 5,000 rooms, do you think that you could hold on to these margins?
So, the margins have to be seen in two lights. First thing is that we have a brilliant asset management team in place, which has institutionally been managing this space for a long time, and we are very careful about our costs. We optimize costs to the last penny. So that's very important, and that has helped us to keep our margins where they are. To expect that the margins will continue to grow would not be right, because there are parts of the portfolio that are currently being added which are in the leisure space, and leisure space typically tends to come with slightly lesser margins. But our challenge would be to continue to hold the margins and steadily grow, and that we are able to do by carefully managing each of our cost lines and optimizing them to the last penny, as I said.
All right, you're being quite candid on that front then. So as we move up, what would be the steady state margins you're looking at?
So right now we expect to be above the mid 40s for sure. And as you know, as a portfolio, we have been a leading portfolio in the as far as margins are concerned when you compare it to the rest of the industry, and we continue to want to stay there.
All right, let's focus on debt then. You're expanding capacity. The industry itself has tailwinds. Personally, I've visited, I think, one of the units that you all manage at Powai, and it's chock-a-block. So given that you're going to be increasing capacity because you believe the industry has a tailwind, the debt number is still at around 2,000 crores. Are you comfortable with this number? Is there a repayment option, or do you see it moving up a little bit from here?
No, so we are very comfortable with this number. The business itself is throwing out cash, which is good enough to manage our expansion. But having said that, we expect the debt to peak around the 2,500 crore mark, which is well within the 3 to 3.5x of 1 year forward EBITDA that stays our North Star when it comes to debt levels. So we are very confident that that's there. What's also interesting in our portfolio is we have a commercial real estate piece, which actually throws cash out at nearly 100% EBITDA margins, and that itself today stands at about 300 crores in total. So we have a very comfortable position on our balance sheet, and we can continue to fund our growth with very little increase in the debt side.
Okay, all right. A quick word on the annuity income. What should it look like in the time to come?
So as we speak, we are in our annuity space, we have about 76% occupancy overall for our portfolio, which is at about 2.4 million. We have another 0.9 million under construction at Powai, the case that you mentioned. But having said that, at 76%, our exit was about 25 crores per month, so about 300 crores per year. When it stabilizes by the end of this year at around 90 to 95%, we expect it to be close to 400 crores.
So that'll be annual?
That will be the annual number, yes. And since it comes at 100% EBITDA, you can expect a 400 crore number. 400
crores in terms of the annuity side. Okay, Shwetank, just an update on a lot of your marquee properties that are coming up. There is Western in Hyderabad, and obviously there's a property that we all know very well, which was earlier known as Dukes in Khandala. So when do all of them start contributing?
It's interesting, Mumbaikars get very excited about Dukes. Obviously, it has a great history. So we are already operational with 117 rooms in Dukes, with most of the facilities online, including a great conference space. And I would urge you all and your viewers to come and sort of experience it for themselves. The balance 30-odd rooms, which will take the total inventory to 147, is expected to come by October, November by this year. So that's the expectation on the Dukes side.
And are there, what about Goa and Trivandrum? Apparently, there were some delays there for those properties. Can you just bring us up to speed on it?
Yeah, absolutely. Look, Goa, we have announced two acquisitions in Goa, one in the north and one in the south. The one in the south is slightly ahead on the curve, and this is Goa, so it's always a bit hard to sort of get the planning permission in Goa. But we are well on track now, and we expect to start by January of this year and open up the south of Goa by FY of 28. I would be a bit more circumspect in talking about the timelines for North Goa, because there are a few hoops that we still need to go through. And we expect a 36-month construction period for it. So we will come back to you with an exact date once we have it firmly under control.
All right, Mr. Singh, and you could gauge who's the more adventurous traveler among us. I was happy with Powai. Surabhi took us all around. Khandala, Goa, Trivandrum. So good times for you all, it seems. We'll track you to all these numbers. Thanks a lot for joining in.
Thank you so much for having me on the show. Thank you.
Well,